As much as it feels bad because April was a down month, I still think probabilities favor May being an up month, and of course, that the market does well the rest of the year.
I'm a little more worried that it may not be so soft, and inflation may not quite go away. The rates may have to go up a little higher. I'm talking about the 10-year rate, the 5-year rate, and that can have consequences.
I think, in fact, there will be rate cuts. I do think there are very favorable signs that inflation is going to calm down.
The idea that inflation would remain robust or even accelerate should not be a surprise to anyone.
We're living in a time where Armageddon in the world economy just might be possible. With crude oil potentially going up to $80 or $90 a barrel, that's pretty high. If it hits 100, that could send the stock market down drastically. Not to mention the S&P 500's got a PE ratio of 26. The Chinese stock market and economy has dropped by almost 50% since 2021. Higher interest rates means more money in bonds and less money in the stock market. Geopolitics with all the issues going on in Ukraine, Israel, and Iran. Not to mention the 10 and 2 yields are inverted, which means if they go back, we could potentially be facing a recession. At least that's what it would be on paper. And if the CPI doesn't get any better and it ends up getting worse, that's going to send interest rates up or keep them the same if we're lucky. So with all of these things being said, do I think this is logically what's going to happen? Not really. Hey guys, Corey here. Welcome to the channel. Thank you so much for being here. I appreciate you so much. Be sure to subscribe and tap that bell if it's your first time stopping in so you know when I post new videos. And if you're feeling generous, you can give me a thumbs up as it greatly helps the channel. If you guys want to sign up for my free newsletter to get my tips, trading strategies, and weekly updates to help you guys become more profitable, the link is in the information box below as well as right here on the screen. If you guys want to become an exclusive member of Invest with Corey and support the channel even further, right below this video you can join to become an exclusive member at any time. A lot of people are upset because they want the rates cut. However, just cutting rates doesn't solve problems. In fact, there's been plenty instances in the past where the feds have cut rates and the stock market has went down. There's also been times where they've cut rates and the stock market has went up. In fact, there's also times where they've hiked rates and the market still went up. It's not really the simple fact of cutting rates that makes the market go up, but more or less why they're cutting the rates. If inflation is coming down and there's less unemployment, then of course cutting rates would make the market go up. However, the one thing that has to be noted here is that typically when the feds pivot and cut rates, even for good reason, typically the markets will do a slight pullback and then start making their way back up again. Because remember, there's at least 2 to 3 pullbacks a year of 3 to 4%, and every year we have an 8 to 10% pullback, which we have not seen this year yet. The problem we're having right now is the geopolitics between Ukraine and Russia, Israel and Iran, all those tensions with crude oil prices on the fritz ready to explode at any moment. But not only that, there's a lot of money in bonds due to the interest rate being high. The 2 and 10 yields are inverted, and theoretically and statistically, if they were to come back down and invert the other way, then on paper that would be a recession, which we cannot afford to have at this point. The Chinese economy and stock market has been in a downward trajectory since 2021. However, recently it has started surging up, which could be a signal that things have changed. When we sit here in fear like this, fear mongering, like I've said in previous videos, because this is really what all of this is, just fear mongering, and they put this on the news that interest rates are going to get cut, then they don't get cut, then they create fear, then the market comes down, and it's a buying opportunity. I've had a lot of you guys in the comments thank me for pointing this out as you got into stocks that went right back up, like for example NIO. When the stock market pulled back last month, April 12th to the 19th, 22nd area, when the markets were pulling back and NIO went to $3.78, I said this is a buying opportunity. NIO has been between $5.70 and $6 for the past 5 trading days or 4 trading days, and it's worked its way right back up. SoFi's earnings weren't that good. They went down to $6.75. Now they're back over $7.15. The entire market for the most part has started working its way back up. Anytime you have fear in the market, which we had April 12th to the 20th, pretty much most of April, that is a buying opportunity. Just a few days ago, HIMS slid from $13, $14 down to $11.30 because the CEO said some things and everyone was worried whether or not they were going to report a profitable earnings. And I told you guys that that was the time time to buy. And guess what? Not only did they beat the estimate, they beat it by a pretty big margin. The EPS was 5 cents versus the estimate being 1 cent. So the earnings call overall was great. The total revenue was a beat on HIMSS as well. And now it's almost $13.50 a share. It's up $2, which is like over 15%. Anytime a stock goes down or the market goes down into a pullback, getting in at that time is good. You can't time the bottom. You're never going to be able to do that. But by selling put or dollar cost averaging down on these stocks during heavy and intense fear in the market is definitely a good thing to do. Anytime you have extreme fear or fear, you should be scouting for buying opportunities. When we look at that, there's also a few other things that signal that maybe we're not really destined to have an apocalyptic scenario in the stock market. With everything I've talked about in this video so far, there's also the fact that the AI boom that they said we were going to have since 2021 hasn't fully played out yet. If we compare AI and the move we've had over the last few years, it's only about 50% of the move we got from the internet boom in the 90s. So it's not really even done its thing yet. We still have another 50% or more to go. So that AI boom that was predicted hasn't really fully boomed. And when you put that together with the fact that we've had some pretty big instances of fear over the last month and everyone bought up shares and now the stock market is starting to move back up again, as well as the Chinese stock market started surging up with NIO and BABA going up, these are all good signs. Not to mention, we haven't even seen the amount of corrections in the market this year that you normally would see in the stock market, in which we actually have seen almost every single year over the last 100 years. So the market hasn't even corrected as much as it normally does. The only really thing we have to concern ourselves with is unemployment, CPI, and the interest rates. And if the Fed pivots, let's just hope that they pivot to cut rates for good reasons and that they're not chasing. In fact, crude oil has been in a downward trend since April 22nd, and it's continually going down every single day. So we don't really have to worry about crude oil at this particular point. Anyone who's saying crude oil is on the fritz to go up is just fear mongering. It's not making any sense. Not to mention the VIX, which is the volatility index, has gone down and slid since April 22nd, which is a good thing. Anytime the VIX goes down, the volatility goes down, the market typically goes up. So the VIX is down, so the volatility is down, crude oil is down, and the markets have started to rise, as well as the markets in China. So I don't think this fear mongering is totally warranted that we're getting all over the internet. I highly suggest doing your own research, but ultimately, anytime the markets do a pullback, it is time to buy. It's a buying opportunity. Over the last 100 years, the 10% and 15% pullbacks that we've seen in the markets were in very good years. So they weren't bad years at all. So just because we have a pullback of 4% or even 6 or 8% doesn't mean it's the end of the world or an apocalypse. I think people are just over exaggerative on the situation, over embellishing and fear mongering. My recommendation is do your due diligence, find companies you believe in and buy those shares, or sell puts to get in, sell calls to get out and run the wheel, or you can just quite simply add to your position for long-term investments and continue to sell covered calls. I just want to point out, I'm not a financial advisor and this is not financial advice. I'm just here to guide you guys on technicals, fundamentals, financials, and strategies, and show you guys some of my knowledge in the stock market. However, it's ultimately up to you to decide which stocks you want to get into and how much of a position size you want to take out in each stock, as ultimately it's your money. Okay guys, here is the VIX, the volatility index, and we can see that it was really high on April 18th, and this is where the news broke with geopolitics right here in Israel and Iran. The VIX went up. April 22nd, the stock market started coming back up again, and the VIXs went down. We're now at $13.48, but during the issues in Israel and Iran last month, we were up to $19. So the VIX has pulled back like 40%, 40%. If we go ahead and look at crude oil, it's the exact same thing. We're going to go ahead and look at April 12th when they started discussing this all over the news. We can see crude oil went down, came back up. Look at the volatility going up, and then now it's completely down, all the way down to $78. So we're at 78, and back in April, we were at 84. So we've dropped almost 10%. The VIX is down 35, 40%. Crude oil is down about 10%. When you think about those numbers, that's positive. The feds haven't said they weren't going to cut rates this year either. We just went from one extreme to the other. We overpriced in all these Fed rate cuts that we expected 6. Then now we were selling off in April expecting no cuts, but they're both over exaggerations, when in reality, we are probably going to see 1 or 2 cuts this year. Maybe more, maybe less, who knows? But realistically, I could see at least 1, maybe 2, but it depends on inflation. We don't need a rate cut for the market to do better. I mean, it would help, it could help, but it doesn't always help. It's more or less the reason you're cutting. It would make more sense to leave the rates unchanged than to cut them for no reason, because that kind of a pivot could send the stock market down into a pullback, and we don't want that. So just based off of crude oil and just based off of the VIX, I don't really see any reason to fear, even though a lot of people did. To me, it's all buying opportunity. Look at HIMS. Look at the big jump HIMS just made. Look at the big jump Rivian made. And I drew this graph on Rivian, and look at this. I drew it like a week ago, and look, it's starting to go up right where I said it would go. If we go look at SoFi, it pulled back just like I said it would go, and I even drew a line, and look where the stock is. It's literally exactly to a T where I drew the line. Like, let's zoom in. Look at this. Down, up, and it's literally touching where I put the line. It's not just where I said it would go, it's in the time frame that I said it would happen as well. And I can't be right about everything, but when I look at the charts and I study data, I've been doing this a long time, I think I'm pretty good at it. I'm pretty close a lot of the time. Not 100%, but pretty close. I even told you Palantir was going to do good when it broke this downtrend and it came up. I even put this $25 marker here, and look, it broke all the way up. Now it's pulled back because the earnings weren't as good, but I even said that it would pull back if earnings were decent and that it would sit around $23. Again, exactly where I said it would go. So I'm not saying I can predict things, but I can read the market and the sentiment, and I've been doing it a long time. So I don't think you guys should worry or panic. I don't think the market is apocalyptic, and I don't think we have Armageddon in the market per se. Anything's possible, okay? Anything could happen. But right now, I think that the market is going to be doing better than we're giving it credit for, because anytime a market hits a fear sentiment, immediately after greed kicks in and the market goes up. We had that last month. Now the market's rallying. All my stocks are up. My portfolio jumped 15% and I didn't make any trades. So we know the market's going up. And not only that, the AI boom that we expected and that we estimated or projected has only achieved about 50% of that move, or in relativity to the internet boom in the 90s. If we even take a look at SoundHound, you guys can see I called the rejection off of the 394 and comes right up. I drew the arrow up in this direction because I was anticipating a $6 move, and we're all the way up to $5. We are only about $1.50 away from where I projected it to be close to earnings. My goal is to help you guys, as I ultimately want you guys to have financial freedom. I told myself that when I achieved financial freedom, that I would do everything in my power to help other people achieve their dreams of success and financial freedom as well. Some of the stocks I highly recommend selling puts on or getting into the stock to sell covered calls: HIMS, Rivian, SoFi, Palantir, SoundHound, Neo, Lyft, Nike, and Upstart are all very good. I got a video coming out on Lyft as well. Lyft is a very good stock right now, and I know a lot of people have a sour taste in their mouth about Lyft, but I would not have that anymore, as their new CEO used to work for Microsoft, and then he went over to Amazon and was responsible for turning that place into the empire it is, or partially responsible. He is a very good CEO, and he's turning Lyft around completely and has the experience to do it. And during the previous 2 earnings calls, Lyft has been profitable, actually the past 3, and they've beaten all 4 of the previous 4 estimates, as you guys can see here. Lyft is holding pretty well. Even during the pullback last month, it didn't go below 1550. We're back up to 1750 again. Lyft is very strong compared to where it was this time last year. The new CEO is doing good. I got a video coming out on Lyft. If you guys want to see a video on Starbucks and Nike, let me know. I want to do a video on those, as well as Tesla and Apple. I just want to start crushing it for you guys and giving you my analysis on these other stocks. But, I just want to give you a quick overview of Lyft. So there's a lot of fear mongering going on right now in the market. It's apocalyptic. It's biblical. It's Armageddon. Things are crazy. We can't make any money. The market's going to crash. The Chinese economy is down. Geopolitics. Crude oil is up. The VIX is up. What are we going to do? Interest rates aren't getting cut. They promised 6. Now we're only going to get 5. Now we're only going to get 1. Now we might not get any. Then we go into a greed, overbought, oversold. Listen, this is crazy. It's ultimately crazy. We need to take a breath and woosah. listen, everything's going to be okay. The market might do a pullback. It might do a 4%, then a 10%, then it's going to go back up again. The interest rates will most likely get cut this year. How many times? Don't know, but we have a good shot of it happening. But remember, like I said, cutting the interest rates isn't the most important thing. It's why we cut the interest rates. If there isn't a good reason why, we should not be cutting the interest rates. Pivoting for no reason is not the right way. We have to be proactive. We don't need to be chasing. So ultimately, we have a lot of good to look forward to. We haven't seen the full potential of the AI boom. This pullback in the previous month is in line with the yearly pullbacks the market has always seen for the last 100 years plus. So there's a good sign. And the VIX is down, so the volatility is down, drastically down, might I add. Crude oil is down, very much down compared to where it was last month. So that's yet again another great sign of things to come. So I think we should just be patient, because now the greed index is starting to move towards neutral. And pretty soon it's going to move towards greed, and you'll have missed out on all these buying opportunities because of these fear-mongering, Armageddon, apocalyptic, and the stock market crashing mumbo jumbo BS. When you see the stock market pulling back like it did, it's a buying opportunity. And ultimately it's going to go up. The stock market is a line from where we are now going up. And no matter how much zigzag happens in between, in 5 to 10 years, we're still going to be up. So find your company, invest your money, and when the market pulls back, dollar cost average, and keep selling covered calls, run the wheel strategy, and sign up for my email newsletter, which is free, so you can learn all of my secrets to trading absolutely free. So I guess ultimately what I'm saying, guys, is don't buy into all the fear-mongering hype. When the market's down, buy it up. It's a discount. It's for sale. It's like going to a thrift shop and getting the best items for cheap. Don't buy into the hype. Don't buy into the fear-mongering. Think for yourself and make decisions based off of knowledge that you have acquired by doing your due diligence and research. And ultimately, everything will work out, because right now, the market actually looks like it's pretty much loaded, locked in, and ready to shoot upwards. In contrast to everybody's fear-mongering beliefs that the market's actually going to crash, I think we're getting ready to hit a pretty big uptrend. Thanks so much, guys, for being here. I really appreciate you. Be sure to subscribe and tap that bell if you haven't already. This way you know when I post new videos. And if you're feeling generous, you can give me a thumbs up at any time, as it greatly helps the channel. Also, if you guys want to sign up for my free newsletter, you can do so anytime. The information box below, and right there is the link on the screen. And you can become a member at any time right below this video to support the channel. Become an exclusive member of Invest with Corey. Until the next video, guys, remember, let's grow our wealth together. Take care, guys.